Hi, welcome to another video market update. Thought you might like these in between the written newsletter, so to change it up a little bit. The markets have been a little bit in flux lately. Everyone's worried about the Federal Reserve taper. However, I wouldn't play too much into this right now. I cannot imagine the Fed's going to taper anytime soon. Typically, they're very slow to react. It's been Bernanke's last couple of meetings. Janet Yellen comes in February. I don't see anything probably until after she's already Fed chairman. We did have some very good economic news last week. We had the unemployment rate drop, more people put back to work. The numbers revised higher. GDP was revised higher from the previous month, from 2.8 to 3.6. We could be getting some traction, some growth. Of course, I do get literally every single day clients asking me when the next shoe is going to drop, and of course we stand ready with one hand on the sell button when necessary, but the important part is to always make sure that your money is invested properly. Can't leave it in the bank earning 0.2%. Of course, we all call that losing money safely, because after inflation and taxes, you're actually losing money, so you don't want to do that. So we're going to continue to look for opportunities, get away from bonds, because if there is a taper, the long bonds will get hit the worst. Continue to look for equities, dividends. There are some income opportunities in foreign markets, unconstrained bond situations, some of the emerging markets. But for the most part, money is going to be made in equities, a little bit higher risk than in the past. But the key is to manage the risk, and most importantly, to make sure your portfolio is always getting the best returns that you need, but with the least risk possible. If you don't need all the risk of the market, for most people, the enemy is not the S&P. If you're retired or getting close to retirement, your enemy is typically not the S&P. You've saved money. Your enemy is inflation and taxes, otherwise known as purchasing power. So if you only need a 5 or 6 or 7% return on your money, don't take all the risk of the market, because you can't withstand the volatility or the big drop when it does come. We are overdue for a bear market, so we can't throw caution to the wind. But in the short term, I don't see any taper on the horizon. I see the economy getting better. Not gangbusters, but definitely getting better. And it looks like a positive situation for stocks, at least through the December situation, which is usually pretty good, and into January, which is typically pretty good for stocks as well. So always get, invest for need, not for greed. I do get a lot of information or requests for people who say, well, how do you invest in something that can go up in value but with limited or no risk? There are investments, of course, that go up with the market but do not go down with the market with guaranteed principal. Just let me know if you want some information on that. And always keep educated. Read the newsletters. Come to our seminars. We have periodic seminars quite often on retirement planning, Social Security. Make sure you join us for one of those. They're informational. Bring a friend. We're happy to have them. They're always free. So if you have any questions whatsoever, give me a call. If you need a free second opinion on your portfolio, I'll be happy to look at it with you, or anything at all. Just don't hesitate to contact me. Thank you.